Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today it's February 22 and it's starting from GBP USD pair with Jakub Novak as usual. But first, let's have a look on 5-minute time frame for analyzing yesterday's transactions. The test of 1.2013 occurred when the MACD line was just starting to move below zero, which was a good pretty signal to sell. However, the decline was only brief as the pair rose again and updated 1.2051. This time, the MACD line had just started to move above zero, which was a good signal to buy. Resultantly, the pair gained as much as 50 pips, but selling on the rebound from 1.2093 led to losses. Pound-dollar saw gains on Tuesday thanks to the strong PMI data on the UK. However, the increase was halted in the afternoon as similar and quite good reports in the US prompted a rise in dollar demand. Nevertheless, there are no UK statistics scheduled to be released today, so market players have all chances to continue the bullish scenario. The Fed's minutes is also the only important thing in the afternoon, and it's unlikely to have any strong impact as much has already changed since the FOMC meeting. For long positions, buy pound when the quote reached 1.2119 and take profit at the price of 1.2170. Growth will be possible as there is a new bullish trend. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Pound can be bought at 1.2079, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.2119 and 1.2170. For short positions, sell pound when the quote reaches 1.2079 and take profit at the price of 1.2035. Pressure will return if there is no activity at the weekly highs. However, when selling, make sure that the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2119, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.2079 and 1.2035. Trading euro-dollar pair with pivot point levels. Evangelos Paulakis reports. Yesterday, the euro pairs were mainly holding the upper hand, but they could not update the low of the last week, 1.0613. Therefore, the previous targets are still valid. The bulls still focused on the short-term intraday trend line of 1.0709 and the one-week trend line at 1.0758. On the other hand, bears still aim to settle the price firmly below the 1-month support at 1.0611. Once it surpassed, it will allow traders to recognize new targets. On smaller timeframes, EURUSD remains in the bear zone. It is trading below 1.0661, 1.0677, represented by the central pivot level, plus a one-week long-term trend line. The instrument could continue its decline after the price passes support of classical pivot levels, which are today seen at 1.0624, 1.0600 and 1.0563. The current balance between the bulls and bears on smaller timeframes could be changed only after the price overcomes the key levels. After that, traders will shift intraday focus on the resistance of classic pivot levels such as 1.0685, 1.0722 and 1.0746. We've got a trading plan for gold presented by Petar Jakimovic. Let's have a look. Gold has been trading in the sideways range at the price of 1834 in the downside trading condition, which is sign for potential downside continuation. Due to the rejection of the resistance zone at 1845, Petar sees potential for the downside rotation towards swing low references. Downside objective is set at the price of 1822. MACD oscillator is showing fresh downside cross, which is another good sign for the further downside movement. Key resistance is set at the price of 1845. We've got a red-hot trading idea for USD CAD pair, Dean Lau describes. Looking at the 4-hour chart, overall price for USD CAD is bullish as the current price is above the Ichimoku cloud. Looking for a pullback by entry at 1.3512, where the overlap resistance is. We're looking to take profit at 1.3704, where the 61% Fibonacci line is. Stop loss will be placed at 1.3446, where the recent swing low is. At the end of the roll, here is Laurie Bailey with AUD-USD pair forecast. AUD-USD closed below the support level of 0.6873, which is what it has been unable to do since January 10. It continued to move down this morning. It seems that the target at nearest support line at 0.6730, as the Marlin oscillator keeps on sliding down. Arriving in the oversold zone is possible. On the 4-hour time frame, the pack consolidated under the indicator lines and the resistance level of 0.6873. The Marlin oscillator is down, which suggests that the pack could reach the target level of 0.6730 soon. That's all for today. See you online soon. Good luck.